Hey guys, I'm back with another video. We're going to go over what can happen in price here, what we can possibly expect going forward, and also today's trading review and also yesterday's trading review. So what do we see here in the daily time frame? We have this BTC that we've been talking about for a few weeks now. I wanted to see how we end up reacting in this range if it wants to work its way down lower. But as you can tell, it's been reacting off of this volume imbalance here and showing willingness of trading away. And we've been using these areas, these order blocks, as a form of support, which then targeted price higher up within there. And then we started getting the closes within that area where possible buys presented today. But looking forward, going into the next few days, I'm looking up at this area, possibly up above this high, or if it just wants to stall out in here. It really depends on what price action wants to do. If it wants to just blow right through and show some like bullish dildo candles all the way up to this area, I'm going to be looking up above these highs here from February, and also this volume imbalance that's sitting over here all the way from August. So those are good areas to keep in mind if price wants to continue bullish. If it wants to continue bearish and flip back around, I would be looking to see if it wants to take this high out and then start to shift lower and show bearish closures down. Then we could target all of these lows because there's a lot of liquidity down below here, and possibly even this BTC that's down here from the daily time frame. I'm going to give a quick rundown here on Bitcoin before I go back over and do my trading review. We have been looking at these levels for a few weeks now. We were starting to take buys down within this area. Obviously not financial advice, but this is what I was talking about in one of my first videos I put back on with Bitcoin. So looking at this BTC targeting up in this area, so it has moved about 29% since then. And then we had this accumulation up within here. We came back down, tapped the BTC again. We started trading away, and there were some opportunities in there I talked about in my last YouTube video. But up in this area, it's the whole monthly time frame. So I'm going to keep my eyes up on here from the 32,000 to like 34, 36, maybe even 38,000 for the short-term targets. And then we're going to see it's probably going to consolidate for a while. And I want to see what happens if we do get up in the area within this gap. So those are my targets within there. All right. I'm going to go over yesterday's trading, and then I'll go over today's trading review. So what did we have yesterday? We had the CPI news, and we had a massive move up higher, took out all this buy-side liquidity. We had inflation numbers come out at 5%, and that's pretty good news compared to how it's been the last 2 years. So it being that low is good news. Everybody and their mom's buying the market. Oh, it's going up, it's going up. And then the market makers bring it back down, because it's like, how do you know? Like, how do I know that it's going to go back down? Look where the liquidity is. Where's the money? It's all down below these lows. So the money up here got smoked out. There's a bunch of money down here. And there's also the BTC here where the market is inefficient. So buy side imbalance, sell side inefficiency. So the market is inefficient in that area. So I'm keeping my eyes on where's the money and where's the inefficient. That's what I'm looking at. And then what just happened with the news. I'm not really too concerned with what the news was, but that's just what we saw within there. 5-minute time frame, where's the money at? We got down below here, and we also have down within here. Yes, there was bullish SMT divergence with NQ when NQ made the lower low here. I did think we could get up above these equal highs that were sitting in this area. And I'll go down and do a 1 minute in a few minutes. So I was actually in buys that did get hit out of break even. And those buys were invalidated when the 5-minute candle closed down below this inversion gap. So when we came back up in here, it never closed a 5-minute bullish candle within that 5-minute inversion gap. So it then came back down and it closed down below it. So that invalidated. That was a game over for the bulls. We are probably not going to come hit this high. So then it did end up shifting down, hit my break even, and then I'm looking lower. So now we have this breaker within here, bearish closures, 15-minute candle, bearish closer on the 15-minute as well, as you can tell within here. And my entries were getting stacked up within this area. So I'm going to show you right here. This is how I made 1.19% on yesterday's trade, was entering within here, taking the trade down below these lows, and also on NASDAQ as well. There's also SMT divergence with NASDAQ. But initially, I had my SMT at the lows here for the buy. We broke market structure here, and I have these equal highs as a clear target. We were in our time frame, the 950 to 1010 macro. Boom. There's a gap right here. I was taking buys within this area. Stop loss was right here, targeting up to there. Came up, came back down. If it was going to keep going bullish, it would not have broken this low, and it also would not have closed with that body on the 5-minute candle below the inversion gap. Price shifted down, and I'm patient. I'm like, okay, where's the money at? The money's down below here, it's down below here, and we have the BTC down here. So I started taking sells within this trade after it started breaking down lower. We had SMT divergence at the highs here, from here to here, and also here to here. NASDAQ made the higher high. NASDAQ made the higher high here. And that was kind of indicating price wanted to work down lower on NASDAQ as well. So I took that trade, boom, slapped it right down. Going over NASDAQ, pretty similar situation where it traded down and there's the higher high. Here's the higher high. Trade right here, stop loss above here, targeting down lower. So the 4-hour rejection block was my short-term target right there, as the other ones were making the lower low. So that's where I took most of my position off, and then I closed the rest when it came back up within this area. The rest hit break even, and then it ended up trading back down throughout the rest of the day to then go hit this daily BTC that we have over here. As you can tell, we activated out the BTC here, which then was another catalyst for price to move up higher and have this massive bullish day. And now look, we have a short-term high right here that we can possibly come hit within the next few days before the end of the week, or if we want to leave those highs for next week, we can possibly get up there as well. Going over today's trading, I did not take any live trades today, but I was looking at these equal highs that are up here at 41.54. As you can tell here on the Discord, I mentioned 41.54 when it was at 11.06. I was looking at those areas up within there when price was, well, after it had its nice leg up higher, I was looking for a nice move up higher. Even before that, I was looking for more buys than anything. Buy side, sell side targets. I favor buy side more. Let's see what the market open presents. So basically it opened, market opened, it traded back down in the consequent encroachment of the opening range. So it closed down here yesterday and it opened here, and in the 50% of that range is right here. So it rejected that a few times. We had a bullish 5-minute candle and then a 1-minute retest on a fair value gap. I was distracted with my other business and I had other things going on today, so my personal life actually got involved in today's trading session, so I could not trade today. So I was looking up at these areas, but if everything was right and everything was like organized and I was not distracted, this would have been a clean opportunity to come take to those equal highs that were sitting up here. Because you can look at the 15-minute time frame. We had a clear distribution to the downside. We have our leg down and we have our curve up. So our curve down, our curve up, and we have our nice distribution to the downside. 1, 2, 3. And then we have a nice break of market structure, internal liquidity, smack the internal liquidity, break of market structure, 15-minute fair value gap. And now we can look at the right time after market open. We're looking for our entry techniques, our closures, our fair value gaps, our breaker blocks, our volume imbalances going towards our equal high draw on liquidity, which was up here. That's what I was personally looking at there. Obviously, I didn't know if it's going to go up or go down right away. I thought it was more likely for it to go up, which it did. But if it did end up breaking down and closing lower, I was going to be looking for breakers and order blocks to take price down below and take out this sell side and also this sell side. So trading is an if-then kind of moment. And then also going up even farther. So let's say you did miss this trade, all right? Let's say the 1-minute time frame over here. This was the trade, in my opinion, where it broke up higher. We have this BTC within this area. Price did come up higher within here. I'm looking at the 5-minute and also the 15-minute. We come back up and we trade back down in this range within here. On the 15-minute as well, we have a this retest within this fair value gap. And also on the 1 hour, we are closing bullish within the 1 hour candle as well. So we closed up bullish within there. We have those equal highs. I thought it was like more likely for it to go up than to go back down. So we have another inversion gap that's sitting right within here. And you can look at these 15-minute bullish candles within that inversion gap. Tap that liquidity, go higher. We would not want to see this swing low broken. So this PD array that's right here, if we were to go bullish, we do not want to see that broken. So that's why it's so important to stay in like 15-minute and 5-minute time frames, so you can really get the bigger picture, because the 1-minute time frame looks like complete shit in this area right here. But if you're like really on point, you can possibly look for entries. Like I said, my personal life was getting involved. I was only tape reading. I was distracted, and I do not trade my life account when I'm distracted. I've lost money doing that before, and I'm not really trying to do that. But I'm looking at price action within here. I was looking, we have this break of structure, and we have this 2-minute order block that's sitting right within here. I do like this 2-minute order block that's also within the 1050 to the 1110 macro that's sitting right there. So if I was trading live, I would have liked to possibly take something like that, but as you can tell, it just chopped around and it was not high probability conditions. That's why it's good to go to the higher time frames, like the 5-minute. You got these 5-minute rejection blocks within here. If it did want to come back down to the rejection block, we have this 15-minute inversion gap that we marked up earlier. If it did want to break higher and keep going, it would have, but even then it was a complete chop, and it came down like in the beginning of the lunch session. It came right back down to shift back up higher, and even on these lower time frames, this price action like isn't clean. This is a nice massive push up higher on top of this breaker that we have here in the 2-minute, And still, like, that's not really a clean entry. Like, it kind of chopped around. Depends on your trading style. If you like that, for all means, go for it. But my target's up here, and this is just choppy price action to me. If I was to really take anything, this is like really good. Just watching market structure and being able to tape read will make you less emotional, and it'll make you detach from the trades that you can actually get into. So that's what I've learned myself, is just watching the market a lot of the time and be like really rigid with your rules, so you can expect less from the market, but like you really have to stick to the rules. So be strict with your rules, but have low expectations from the market for like a win or even a loss. So we're just in a game of probability. We're not trying to make money on every trade. And then if you know it's a high resistance liquidity run, which this was for the beginning portion of the morning, and then knowing that I was distracted and these weren't great conditions, even though I was right on my analysis of it going to hit these equal highs, I have no fear of missing out and wanting to take an opportunity, because I know I can trust myself with sticking with the rules, because that's the whole goal. Stick to the rules. Then when you actually see an opportunity, you know you can freaking trust yourself to take the trade and then be profitable on the trade. Obviously not financial advice, but you get what I'm trying to say here. But I'm going to wrap this up. I did my review of where I'm expecting it to go later, and then also the review from today's and yesterday's trading. So take it easy, guys. Love y'all.